Hello, Tuesday, January 26th, 2026. Everyone thinks yesterday was just another Monday. The Dow was up a few hundred points. You're watching the S&P 500. You're waiting for Microsoft and Meta to report earnings. You think the biggest risk this week is a hawkish Fed. Stop. You're looking at the wrong chart. While you were watching the index paint a pretty picture, the single most important alarm bell in the global financial system just shattered the glass. The soft landing didn't just stumble yesterday, it died. And almost nobody is positioned for the funeral. This is the pre-market pulse. Let's identify the victim of the soft landing. Here is the story you're being sold right now. It's the Goldilocks narrative. Open any financial news app this morning. The headlines are all about the Magnificent Seven. We have 102 companies in the S&P 500 reporting this week. The consensus view is simple. Sure, things are volatile, but the consumer is holding up and AI spending is shifting into higher gear. They tell you the Federal Reserve is going to hold rates steady tomorrow. They tell you that the inflation battle is mostly won. They see the markets drifting higher and they tell you it's resilience. They look at the geopolitical noise, Trump threatening Canada, the Greenland disputes, and they dismiss it as negotiating tactics. They think it's just bluster. They think the trade channels will stay open. Most dangerously, they believe that if things get rocky, they could just hide in the usual digital safe havens. They believe the system is still functioning as designed. They are wrong. They are pricing in a world where nothing breaks. But if you look at the flow of actual money, not the words but the cash, you will see that the smartest capital in the world is running for the exits. There are three signals flashing red right now that simply cannot coexist with a healthy stock market. These aren't opinions. These are hard numbers that contradict the bull market narrative. Signal number one, the gold panic. Gold didn't just go up yesterday. It broke $5,100 an ounce. It is up 64% in the last year. Do not confuse this with a normal bull market. When gold moves this fast, breaking all-time highs day after day, it is an investment. It is an insurance policy. It is a panic button. We are seeing central banks and sovereign wealth funds buying bullion with both hands. Now, the mainstream will tell you this is just an inflation hedge. But if that were true, we would see a very specific correlation. We would see all store of value assets rising together. We would see the debasement trade lifting all boats. But that brings us to signal number two, which proves the inflation narrative is a lie. Crypto is dumping. If this was a simple money-printing rally, Bitcoin should be at all-time highs alongside gold. It's not. It's struggling at $86,000. Even worse, look at the flows. Crypto funds just saw $1.73 billion in outflows last week. That is the biggest exit since the crash of November 2025. Listen to what that money is saying. It is leaving the speculative, risk-on digital gold, and it is flooding into the physical survival asset of actual gold. This is not risk-on. This is risk-off on steroids. The market is telling you that they don't trust digital assets to hold value when the geopolitical walls close in. They want physical metal. They want assets that don't need electricity or the internet to exist. Signal number three, the physical world is breaking. While the stock market debates AI software margins, the physical supply chain is snapping in real time. Look at natural gas. It didn't just tick up. It exploded. Prices spiked 66% in a single week. In some spot markets, it hit $30. Why? Because an Arctic blast is freezing production across the U.S. We have lost over 10% of U.S. natural gas production in days due to freeze-offs. At the same time, we have the President of the United States threatening a 100% tariff on Canada, our largest trading partner, because of a trade deal they made with China. Do you see the contradiction? Stock investors are pricing in business as usual and AI utopian growth. Commodity investors are pricing in systemic fracture and trade war. They cannot both be right. You cannot have a frictionless digital economy on top of a fractured freezing, tariff-locked physical world. So, what happens when this contradiction resolves? History is very clear on this. When the fear trade gold goes parabolic while the greed trade stocks stays flat, we're usually days or weeks away from a liquidity event. Think about the mechanism. Gold at $5,100 means the cost of safety has skyrocketed. Natural gas up 66% means the cost of living and operating is about to roar back. This destroys the Goldilocks scenario for the S&P 500. First, inflation. You cannot have the Fed cut rates or even hold them comfortably when energy prices are ripping higher and tariffs are slamming the cost of goods. That 66% spike in gas isn't just a number on a screen. That is heating bills, that is industrial power costs, that is fertilizer costs. That is inflation instantly re-accelerating. Second, the soft landing depends on the consumer staying strong. But if heating bills are up 20% and the cost of imported goods from Canada doubles overnight due to tariffs, the consumer is tapped out. But the bigger risk, the one the algo traders are ignoring, is liquidity. When huge players, hedge funds, sovereign wealth funds, need to cover losses in their risk books, or when they need to post margin because their energy hedges blew up, what do they sell? They don't sell gold. They just bought that for safety. They don't sell nat gas. They need that to hedge. They sell what they can, not what they want. They sell Apple. They sell the S&P 500. They sell the winners. We are already seeing the cracks. Crypto dumping $1.7 billion is the canary in the coal mine. That is liquidity leaving the system. That is the most speculative edge of the market saying, I need cash now. The consequence isn't just a correction. It's a regime change. We are moving from market driven by growth to a market driven by scarcity. Scarcity of energy. Scarcity of safe assets. Scarcity of trust between nations. Here is the reality for tomorrow. The mainstream will tell you to watch the Fed meeting. They will parse every word from the chairman. They will obsess over whether Meta beat revenue by 1% or 2%. Ignore the words. Watch the flows. If gold holds above $5,000 and crypto continues to bleed, the decision has already been made. The smart money is bunkering down. They are preparing for a world where return of capital matters more than return on capital. The window to rotate out of hope and into reality is closing. The physical world is reasserting itself over the digital one. Don't be the last one holding the bag when the narrative finally catches up to the price. This is the pre-market pulse. If you like our content, remember to hit that subscribe button.